In my videos, I often talk about the two profit potentials from selling covered call options. So I get asked a lot from new traders, what are those two profit streams and how can I make money selling covered call options? Hey, welcome stock hackers, I'm Jim Ray and this is Simple Option Trading, where I share my stock investing and option trading strategies so that you can learn and earn more. Now I've found that selling covered calls is a great way to make a monthly income or sometimes even a weekly income. Now, two reasons why I love selling covered calls, because number one, I can generate a profit from the premium payment that I received. And number two, I also realize a profit from the price appreciation if I pick a good strike price for my option contract. One of my secrets for profitable trading and investing for wealth is my one-button stock screener. It's literally the first tool I use whenever I sit down for a trading session. It helps me narrow down the list of over 8,000 available stocks and find good candidate stocks and ETFs that'll help set me up for profitable option trades and long-term investing wealth. This PDF file contains hyperlinks that are pre-programmed with targeted criteria that automatically activate a free stock screener in your web browser. You just push a button on the link and you'll get a list of stocks that you're looking for. Find stocks that are trending higher. Or maybe you want to see stocks that are recommended by professional industry analysts. Or even stocks that pay you larger premiums. Now, who doesn't want that? So join my newsletter and get access to download my free one-button stock screener. Head on over to stockhacker.com. So here are the results from my one-button stock screener. Let's go ahead and take a look at the first one, which is Camping World Holdings Incorporated, stock symbol CWH. So I take the ticker symbol and I jump over to Yahoo Finance and I just input CWH and I get Camping World Holdings. Let's take a look. And we can see here Camping World Holdings currently has a market cap of $913 million and an average share trading volume of just over 1 million shares. Now, the industry analysts, they give this stock an estimated one-year price target of $32.50. So that gives this stock an upside potential of just over 58%. Now, we can see that this company pays a dividend to the shareholders of about 50 cents per year, which is a yield of 2.44%. Now, if you're not familiar with Camping World Holdings, we can take a look at the profile and we can see that it's involved in the auto and truck dealership industry. And for a quick description, we can see Camping World Holdings Incorporated, together with its subsidiaries, retails recreational vehicles, sometimes also known as RVs, and related products and services. Now, it operates in two segments, the Good Sam services and plans, and RV and outdoor retail. So the company provides a portfolio of services, protection plans, products, and resources in the RV industry. So the company was founded in 1966 and it's headquartered in Lincolnshire, Illinois. So now that we know a little bit about Camping World Holdings, and if we are a strong believer in the products and services that they offer, let's take a deeper look into the company to see the financials. So clicking on the financials, we can see that we're presented with the income statement, the balance sheet, and also the cash flow statement. So taking a look at the income statement, we can see that the total revenue has been increasing over time, year over year. So that's a good sign. As we jump over to the balance sheet, we can take a look at the total assets, and we can see that this number has been increasing year over year, except for 2020. But I'm going to go ahead and give the company a pass on this one, because if you remember, that's when we had the global pandemic. And so everyone was struggling during that time. And now I'm going to jump over to the cash flow statement. And we can also see that the company's cash flow has been increasing, although in 2020 we can see that the company was flush with cash, which is kind of ironic since that was the year that the global pandemic hit. Here we can see 5 industry analyst ratings, and they give this stock a strong buy rating. Here's a daily chart going back 1 year to September of 2022. And if we check out the current stock price, which is at $20.51, we can see it's currently way under the 20-day moving average. So it might be possible that this stock is poised and ready to start moving higher. So with that in mind, I may want to take a look at using this stock for selling a covered call. So I jump over to my trading platform on my brokerage account and take a look at Camping World CWH, ticker symbol CWH, and I'm interested in selling a covered call. So I'm going to go and press Trade CWH Options and sell covered call. And I'm going to look at an expiration day about 30 days out, so that's going to be October 20th. And we can see that with the current stock price of $20.51, you can see that I could sell a covered call with a $21 strike price and receive 80 cents per share as the premium payment. Let's go ahead and plug these numbers into my covered call analysis worksheet. So today's September 20th, and the stock is CWH, Camping World Holdings. I've got an expiration date of October 20th, so that's 1 month out. I'm going to use the $21 strike price, which is currently paying 80 cents per share as a premium payment. And my cost basis, well, if I purchase the shares today, it's $20.51. So now let's take a look at how the numbers fall out. So we can see the market price, $20.51. I'd be interested in purchasing 100 shares, so that would cost me $2,051. That would be sufficient for me to sell one covered call option contract. And with the expiration date of October 20th, that would give the length of this contract 29 days. And using my cost basis of $20.51, if this covered call option contract were to get exercised and I received $21 per share, I would receive 49 cents per share just from price appreciation alone. Now for selling the covered call option contract, I would receive $80 as the premium payment. Remember, it's 80 cents per share times the 100 shares, so that's where you get the $80. And that represents a return of 3.9% off of this 30-day covered call option contract. Now, if this option contract were to get exercised on or before the expiration date, I would receive a total profit of $129. And so that's from the premium that I received, that's the $80, plus the payment for my shares. Remember, I would get $21 per share, of which 49 cents per share would be the profit from price appreciation, so that's $49. So the $49 plus the $80 is $129, giving me a total profit of 6.29% for this 30-day covered call option contract, which equates to an annualized return of almost 55%. Let's take a quick minute and walk through the transaction and see the two possible outcomes that I've just discussed. So here you are selling a covered call, and you happen to own 100 shares of Camping World Holdings, ticker symbol CWH. Now you paid $20.51 per share, so your total cash outlay is $2,051. Now, using those shares of stock, you can use them as collateral to sell a covered call. So here we see the covered call option contract for the shares you own, CWH. Use a $21 strike price and an expiration date that's 1 month out, or October 20th of 2023. You put this available on the open market for selling a covered call, and then an interested buyer on the stock market who sees your option contract and believes that the stock price will go above $21 will want to purchase your covered call option contract. Now, in order for them to purchase the contract from you, they'll need to make a premium payment to you, which we saw was 80 cents per share. Now, at this point, you've received $80 premium payment, which gets credited immediately to your trading account, and you can use that now for anything that you want. And that money's yours to keep forever. Now, let's take a look at the different outcomes. So in outcome number 1, the buyer is going to exercise the option contract. And this would happen on or before the expiration date when the market price exceeds the strike price. So if the strike price is $22, that would be a condition where the buyer would actually exercise the option contract. So if that's the case, the buyer would execute the option contract, pay you the $21 per share based upon the strike price, so you would receive $2,100 for your shares, and the shares that you hold would get assigned to the buyer. So now the buyer holds the 100 shares of CWH. So you make a profit from selling the shares, so that's the price appreciation. So remember, you paid $2,051, but you received $2,100 from the buyer when they purchased your shares, so that's a $49 gain. And in addition, you keep the option premium that you received initially at the beginning when you sold the covered call option contract. Now let's take a look at outcome number 2, where the option contract expires. So what happens on the expiration date when the market price is below the strike price? Well, so in that case, the option is worthless, and so the buyer would never execute it. Which means, at the end of the day, you get to keep your shares of stock, the 100 shares that you originally held. You keep and retain ownership of those shares. Plus, you also keep the premium payment that you received for selling the covered call option contract in the beginning. So join my newsletter and get access to download my free one-button stock screener. Head on over to stockhacker.com.